Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, this video is being filmed on Thursday evening for Friday's trading. That would be 07/31/09. In last night's video, I put a flag formation on the board and said to you, in the S&P, that's the formation I'm going after because that's the formation that exists at this point in time on the chart, and that I was expecting the market to break out of this flag towards the upside. Well, it's exactly what happened. Go technical analysis, right? You gotta love technical analysis. How on earth could we have known the market was going to go higher when indicators were pointing down? What you heard on television was basically bearish. The news you hear on the street just for that day was basically bearish. Wednesday expecting a sale for Thursday. But the analysis said, no way, Oscar, you got to get in front of a camera and tell people to go long. And the market went higher. There is no crystal ball here, traders. That comes directly off of a chart and off the formations on that chart. And we teach our Omniacs at the Omni Trading Academy every day how to read these formations and not be fooled by what they hear, but to trade what they see. With that in mind, traders, I'd like to show you the flag formation, what it looks like now. I will show you yesterday's chart we had in yesterday's video. Then I'll show you today's chart, what it looks like after it updated. Then I have an example of a bearish flag I'd like for you to see. And then on top of that, 2 videos ago, not last night, but the night before, I told everybody, keep an eye on Soy Meal and Soybeans because they're ready to go. Then we did a class at the site, a live class, and I illustrated why I think that's going to happen. Traders, soybeans and soy meal exploded on Thursday. And I have some charts I'd like to show you there. So with no further ado, let's go to the charts. Okay, traders, what you are looking at right now is the very same chart I put before you in last night's YouTube video, the video filmed on Wednesday for Thursday's trading. And I said, look, this is what a bull flag looks like. And what's supposed to happen with the bull flag is a breakout towards the upside. You're supposed to get above this line and move higher. So this is a bullish flag forming. We called for a buy in the S&P. I mentioned that technical indicators were clearly pointing lower. However, formations take precedence over indicators when you have a clearly defined formation. That flag, we expected to move higher. I'd like to show you what the chart looks like today after Thursday's movement. So I'm going to move this chart over to the left and show you what has happened with that flag since last night's video. Okay, traders, what you are looking at is the very same chart from last night, however, updated with Thursday's trading action. And lo and behold, look what happened, traders. We broke right out of that flag and put this bar in the very next day after us calling for a flag breakout over bearish indicators. Traders, technical analysis really does work well. I want you to use these techniques because there's almost no way that you could have called that market moving higher based on indicators or the news, but you look at that formation, you make your call, and boom, you get exactly what you're looking for. Now, that won't happen 100% of the time, but the odds are certainly in your favor if you pay attention to your formations. Now I'd like to show you the opposite. This is a bullish flag. Let me show you what a bearish flag setup looks like. Okay, traders, what you are looking at now is September bonds, 30-year T-bonds daily bar chart. This is an example of a bearish flag, the opposite of what we had in S&P, because in the S&P we had a pole, then we had a flag, and then we broke out of the flag, right? So we were expecting the market to go higher. Well, this one, the flagpole is up here coming down. The flag is going up. That should be bearish, a continuation pattern for bonds. So you would handle this trade exactly opposite of the way we viewed or handled the S&P trade for Thursday. You would expect that if it gets somewhere up here, you could go short. And if it gets down here, maybe it'll hold. But at some point in the next couple of days, if not tomorrow, it will break out of that flag and head towards the downside. That is the difference between a bullish flag and a bearish flag. S&P had a bullish flag, the last chart you've seen. This is a bearish flag. pull your bond charts, take a look at that for yourselves, and see the difference between the S&P bull flag and the bond bear flag. Now, the next two charts I'd like to show you are the soy meal and soybean charts. Again, we mentioned in the video 2 nights ago that we were expecting soy meal to take the rally, to take the lead in the rally, and soybeans would follow. Look at these next couple of charts. All right, traders, you are looking at September soy meal daily bar. Soybean meal September daily bar. This is the Omni's proprietary moving average. We mentioned that soy meal usually leads the soybeans higher. Soy meal took a nice run up, but if you look at this little sharp move right here, it started its run up before the soybeans. It got sharper and sharper and then blew out and got decisively past the Omni proprietary moving average. So that's soy meal. It is leading the way. It has broken out. Let's go look at the soybean chart now. Okay, traders, now you are looking at the soybeans November daily bar chart. Not soy meal this time, it's soybeans. As you can see, it was not as sharp of a rally right here when it started to go up. So soy meal did lead the way as far as the rally. It started to go up quicker. But then look at the rally soybeans had yesterday, and it too is above the Omni proprietary average. But the soy meal got above it all the way down here. It took soybeans much higher to get above that average. Once again, proving soy meal does lead the way for soybeans. In any event, you broke out of a beautiful channel. Look how many times this channel was tested, and it held. Finally, it broke out, and you got above the Omni proprietary. If you can stay here for a couple of days, you have very big movement expected on the upside. So once again, technical analysis, go baby, go. How can you beat it? How can anybody make predictions of this nature without having tomorrow's newspaper unless there's something better than that? And what we have are graphs or charts and technical analysis. It really does help, traders. Do your homework, pull your own charts, and we'll discuss what you see at the site. So, traders, you see those charts? I almost lifted myself up with the excitement from that. Talk about flags and analysis working well. But to reiterate, let me go back one more time, traders. A bear flag, this is an example of a bear flag. The pole stretches down, the flag starts to go up, and then the breakout is to the downside. That's your bear flag. The example of a bull flag, the flag pole goes up, 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 then the flag waves down and you break out to the upside. That's a bull flag. Make sure you know the difference between a bearish flag and a bullish flag and know when to choose formations over indicators. All right, traders, I'm not going to do much more in this video. Remember, don't trade alone. Come on down to www.livewithoscar.com. Jump into our free chat rooms and allow us to teach you not only how to view the charts correctly, but how to derive a trading plan and stick to that plan after you've come up with chart analysis. That, believe me, is a very, very integral part of trading. If you do not know how to come up with a plan, none of this analysis is going to help you. So come on down to the site. Last but not least, traders, a stop is your best friend. Never trade without stops. A stop is about the only thing you can do to keep your account alive in the event that you choose to trade incorrectly. So always place your stops. And remember to keep your emotions out of trading. One of the best things you can do is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.